Ladies and gentlemen, good day and welcome to the Q4 FY24 conference call of Bigbloc Construction Limited. As a reminder, all participants' line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Stuti Shah from Veloram Capital. Thank you and over to you, ma'am.
Thank you. Good morning, everyone. My name is Stuti Shah from Veloram Advisors. We represent investor relations for Bigbloc Construction Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings concall for the fourth quarter and financial year 2024. Before we begin, let me mention a short cautionary statement. Some of these statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made from the information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is probably to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management team participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Mohit Sabu, CFO, and Mr. Manish Sabu, Head of Marketing and Strategy. Without any further delay, I request Mr. Mohit Sabu to start with his opening remarks, followed by financial and operational highlights of the company. Thank you, and over to you, sir.
Thank you, Stuti. Good morning, everyone. It is a pleasure to welcome you all to our earnings conference call for the fourth quarter and financial year end 2024. Let me first take you through the financial performance of the company for the fourth quarter and then followed by the year-ended results for the financial year 2024. During the quarter under review, the operating revenues for the quarter were rupees 68 crores, which grew by 46% year-on-year. The EBITDA was reported at approximately rupees 13 crores, representing a year-on-year growth of 19%. EBITDA margins were about 18.53%. Profit after tax for the quarter stood at around rupees 9 crores, which grew by around 54% year-on-year, with PAT margins reported at approximately 12.65%. For the year under review, the company's operating revenues stood at rupees 243 crores, demonstrating a 22% growth year-on-year. EBITDA was reported at rupees 56 crores, which grew by 12% year-on-year. EBITDA margin stood at around 23.07%, while the profit after tax was reported at rupees 31 crores, growing by 2% year-on-year, with PAT margins reported at approximately around 12.6%. The capacity utilization for the quarter was about 85%. And the annual capacity utilization was approximately at around 75%. On the operational front, our volumes for Q4 FY24 grew by 63% year-on-year to 1,79,250 cubic meters, while for FY24, the volume growth was 31% year-on-year to 6,149 cubic meters. I am pleased to inform you that our JV Siam Cement, Bigbloc Construction Technology Private Limited, which has its plant located at Ramusari, Gujarat, has commenced production of AAC blocks and ALC panels with a capacity of 250,000 cubic meters per annum since March 30th, 2024. Additionally, due to the rising demand scenario and strong utilization levels, we are expanding our capacity at Wada from 250,000 to 500,000 cubic meters per annum of AAC blocks. Once completed, it will be the largest single location capacity AAC block plant in India. We have also received the eligibility certificate for subsidy and have applied for registration of carbon credits at Wera for the Wada plant. Lastly, we have just completed a solar installation of 450 kilowatt at our Umargaon plant in the year under review and are in the process of installing a solar plant of 625 kilowatts at our Wada unit. In the current year, we are looking to install rooftop solar plant at all our factories as per the permissible government rules, thereby reducing our carbon footprint and also improving our operational efficiency. Last year, we have also entered lots of different newer markets, which includes Nasik, Nandurbar, Dhulia, Rajkot, Jamnagar, Mundra, Udaipur, Jalgaon, Barwani, and many others. Also, we have been concentrating on increasing our customer base and have added new clients like Birla Estates, Afcons Infrastructure, Niyati Group, Symbiosis Educational Institution, Vilas Dowdekar, JSW Steel, Reliance Licenses, Arcade Developers, Alembic Limited, Dosti Group, Setia Infrastructure, Purvankara Group, New Consolidated Construction, Welspun Group, and many others to our already huge list of clientele. With that, we can now open the floor for the questions and answer sessions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prathamesh Diwar from Tiger Assets. Please go ahead.
Yeah. So just wanted to know, after our capacity expansion, our capacity will be around 1.6 million CBM, right? Around?
No, actually, currently our capacity is at around 1 million cubic meters, and with the expansion in hand at Wada, our capacity will go up to almost 1.3 million cubic meters per annum.
1.3, okay. And sir, till what peak capacity utilization can we do?
So honestly, on an average, since the last 2 to 3 years, we have been witnessing capacity utilization in the range of around 80 to 85%. And in the last year, our annual capacity utilization was approximately at around 75% because of newer capacities added, which takes a period of approximately around 6 months to scale up to almost 80-85%. But once a new capacity is added, I think in a period of 6 months, we reach up to a utilization of 80 to 85%, and that's what we are concentrating on, achieving utilizations of 80% upwards.
Okay. So any volume guidance for FY25?
So our installed capacity for FY25 will be approximately at around 1.3 million cubic meters, which will be completed in the next 2.5 to 3 months approximately. And I think similar utilization levels of almost 75% plus for this year can be targeted.
Great, sir. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Sania Mehta from Moneybee. Please go ahead.
Hello, am I audible?
Yes, ma'am.
Yeah, actually I wanted to ask what were the FY24 volumes?
Can you be a little louder actually?
Oh yeah, FY24 volumes.
So for FY24, the total volume was around 6 lakh cubic meters.
Okay, and the volumes for this quarter?
You mean to say the volume for Q4?
Yeah, the quarter 4.
So the volume for Q4 was approximately at around 1,70,000 cubic meters.
All right. Thank you so much.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Shraddha Kapadia from Share India. Please go ahead.
Hello, am I audible? Hello.
Yes, I would request you to be a little louder if possible.
Is this better?
Yes.
Yeah. So actually, can you give us a guidance for FY25 and 26 in terms of the revenue as well as margin?
So in terms of revenue, our current year revenue growth has been at approximately around 20%, and I think for the FY25 also we can expect a similar revenue growth of approximately 20 to 25%. And similarly for FY26, I think with the current capacities we can see a further 10 to 15% revenue increase. Plus we are also concentrating and trying to identify different markets, and as mentioned in our earlier Concall, we'll be looking at geographies in southern India, somewhere near Chennai, Bangalore, and one more in northern or central India, which we shall be taking up in the current financial year.
Okay. Thank you so much. Also, I wanted to understand this current quarter our margins have been quite impacted. So was there anything specific or was it because of maybe lower utilization?
So the margins have been a little bit affected because, as I mentioned, that we have penetrated lots of different newer markets, and plus in the last quarter we have also done a lot of marketing and etc. activities of the JV company, for which we have just started productions, because panels being a new product, we'll have to do lots of mock-ups and introduction entry to the market. And we have set up a new altogether different sales team and channel for the panel division, which is a JV with the Thai company. So only the expenses have been brought forward in the last quarter, and there has been hardly any revenue generated from the same. The revenue generation for the same should begin from Q1 and Q2 onwards, and that's why the margins have been a little affected.
Okay. Would it be possible to give a breakup for maybe your additional expenses?
Sorry, I didn't get your question clearly.
Basically, hello?
I request you to move the device far away.
Hello, is this better?
Yes.
Yeah, so is it possible to give us maybe the breakup of the additional expenses, especially in terms of your advertising? Normal, what is the average percentage, and what additional expenses which we have incurred maybe in this quarter? And what would be the normalized level which we expect in future?
So, as I mentioned that we have penetrated newer markets, and because of which the margins have been a little on the lower side. And additional breakup of expenses, I think I don't have it handily available right now, but it can be provided to you later on by the IR team if requested.
Okay. Sure. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Prathamesh Dhiwar from Tiger Assets. Please go ahead.
Yeah, just a follow-up question, sir. How are we looking at margins in, let's say, for 25 and 26?
So for the current year, again, our margin target of EBITDA margins maintaining in the range of 20 to 25% is that's what we are looking at.
Okay, and for 26, sir?
I think similar EBITDA margins, because honestly speaking, these margins look quite attractive and are pretty good, and we are concentrating on volume growth and revenue growth by maintaining similar margins.
Okay. So, sir, just wanted to know on the realization front, is it like will both the things contribute in the revenue, or will volumes contribute more?
So currently our target right now is to increase our capacity utilization and increase the volumes, etc. So gradually once we reach optimum utilization at all our units, then we'll be concentrating more on realization growth honestly. And since, as I mentioned earlier, that panel is a new product that we are introducing in the market, and in order to shift the customers from their existing products to panels, we might have to give some introductory discounts, etc. And once the product gets adapted in a period of about 6 to 12 months, we should be able to increase margins in the panels, because more or less currently we are one of the foremost and pioneers in manufacturing of ALC walls.
Okay, sir, this new product panel, like, can you give some information about it, like what margin it caters and since after when it will start contributing in the revenues?
Mohit, I'll take that. So currently, the panels can be a replacement for red bricks and other, other panels, the fiber sheet panels and the bison panels. It can be a straightaway replacement for them. And this ALC panels are comparatively far better than any other panel products available in India currently. And initially, I think, we should be at similar margins between 20 and 25% in panels. But going forward, the margins can be a bit better. But I think about the margins improvement further, we can only get to know once, the unit stabilizes because it has just started production.
Okay, and from where it will start contributing in the revenue?
So for panels, I think the panels will start contributing, I think, from Q3.
Okay. Great, sir. Thank you. Thank you. That's it from us.
Thank you. The next question is from the line of Aditya from Securities Investment Management Company. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, if you could just talk about how's the demand looking like in the real estate sector now. So we are seeing a strong tailwind in the last 2 years. So do you expect this to continue going forward as well?
So the demand, frankly, is looking fantastic. But yes, definitely this quarter, I think major reason due to elections is, there are definitely some labor issues at a lot of construction sites. But I think that's a phenomena which happens every 5 years. But other than that, the demand, launches of new products, new projects in real estate sector, everything is, on track practically. It's very similar to what we have been seeing in the last 2-3 years.
Understood, sir. And sir, now when you are penetrating into newer markets, so what would be the realization difference between our strong markets in Maharashtra as compared to newer markets somewhere like in Gujarat? Is there any big realization difference?
So the realizations are a little bit on the lower side to a certain extent, but that is sort of 3 to 5%, which could be because of product introduction and market penetration. And slowly and gradually, once the adaptation of the product improvises in such newer markets, we should be gradually able to increase those realizations and get it at par with the other markets that we are talking about.
Got it, sir. And is there any competitive intensity difference between both these markets, or the competitive intensity is similar in all the markets?
I think competitive intensity is similar because more or less plant locations and etc. Majorly, whatever difference would be in the transportation cost for finished goods as well as raw materials. So that way the competitive scenario is more or less similar.
Understood. And sir, what would be the current realization difference between red bricks and our blocks?
I think currently red bricks are almost in the similar price range of almost 4,500 to 5,000 rupees a cubic meter, and AAC blocks are in the range of almost 3,800 to 4,000 rupees a cubic meter.
Okay, so the possibility of pricing reducing further is a little less for AAC blocks. Would that be fair?
Yes, currently looking at the scenario, we don't see a much downward trend in the pricing. It's just that, in the last year, the pricing trend has gone down by almost 2 to 3 or 5% maximum, but that has been backed by the reduction in all the construction materials, be it cement, be it coal, energy cost, be it lime, or even, steel. All raw materials of construction division have gone down, and that's why prices of AAC blocks have also reduced a little bit. But in terms of the margins, they have been maintained at almost similar levels.
Understood, sir. Thank you, sir, for answering my questions.
Thank you.
Thank you. The next question is from the line of Chandresh Malpani from Nivesha Investment Advisors. Please go ahead.
Hello. Hi, sir. Thank you for the opportunity. So my first question is on the geographical expansion which we have been talking in previous Concall. So what is the update on the south side? Are we looking for any inorganic growth or something like that?
Hi, Chandresh. Good to hear that question from your end, and good to hear that you have been following our company in the past phone calls as well. So regarding the capacity additions for other geographies to the tune of South as well as Northern India. So for Southern India, near Bangalore or Chennai, we are almost in the finalization phase of land, and I think hopefully we should be able to close that in the next 2 to 3 months more or less. And similarly, we are also looking at opportunities in northern as well as central India for our upcoming expansions. And once we narrow down on the same, I think that too, our target is to close it down in the current financial year itself. So we are looking at increasing our capacities at both the locations in the current year. And your second question was about inorganic growth. So honestly, there are not too many inorganic growth opportunities or options available. And whatever options and opportunities are available in the inorganic growth, those are like comparatively older plants which are maybe around 5, 7, 8 years old. And they must also be running at almost good capital utilization of almost 65-70% plus upwards. So it would not be available at a bargain or at a discount, firstly. Secondly, the old plants that have been installed as compared to the new plants that are available now, which we have installed at WADA as well as in the JV project. So the new plants are almost fully automatic, which require much less labor. The quality levels are much better. The rejection levels are much lower. And to add to the same thing, the scale of the and the size of the plant. So the old plants in India are an average size of almost 150,000 to 200,000 cubic meters per annum, whereas the new plants can be ramped up to almost 500,000 cubic meters per annum. So in the longer run, the newer plants will play a major role in increasing the margins whenever there's a margin squeeze or anything in the industry. So we are looking at putting up new greenfield units only with the best latest technology plants available.
Okay. And sir, secondly, on the debt side of the part, like we understand that the capex has been done on WADA, and so the debt has increased, but the debt to equity now is inching up to 1.3. So, like any view on where would be seeing this as comfortable level debt to equity ratio?
So the debt to equity has gone up from almost 1.05, 1.1 to 1.3, but that is mainly because this is again on a consolidated level, whereas the debt is completely on the books of the balance sheet, whereas 48% of the debt is belonging to the SCG Group also, which is a venture partner in the JV project. Secondly, the JV project has almost been completed and started, and currently only the debt has increased so that there has been no revenues contributed by the JV project. Thirdly, even the WADA project phase 2 expansion is currently ongoing, for which some of the debt is also availed. So, when we are in a capex cycle, once the debt cycle goes up, but once the revenues start to come in from those increased capacity utilizations, the debt equity again will come down to the targeted level of around 1:1, which we have been talking about. And I think with the current 1.3 debt equity ratio, it is only because the capacity has been scaled up without any revenue generation in the upcoming 6 months, more or less.
Okay, and so lastly on this WADA expansion, I'm assuming that we are running late on this expansion, like by 6 to 8 months. So any challenges on expanding the capacity? And second, and with respect to the same, I also want to know that the incentives that we are getting for the WADA plant, will that be affected in any manner?
So, WADA plant, we took up the capacity expansion tentatively in around November, and we placed the order for machinery. We have received almost all the machineries on site, and civil works, etc. are ongoing. We are just waiting for some permissions from the government department because of the elections, etc. A lot of the government offices, etc. Availability is a little less because we have to take approval from the MPCB board as well as the boiler department for increasing the utilization of the newer capacities. And out of the 250,000 capacity expansion at WADA, 50,000 has already started, and another 200,000 should start in the next 1.5 to 2 months at maximum. And probably we have already received the eligibility certificate for phase 1 of WADA, and which has already been communicated to the exchange, and we'll be generating a subsidy of almost 27 crores spread over a period of 10 years. so almost 2.7 crores every year. And this is, I don't think there has been any delay. Our target was to complete it by May-June 2024, which we should be able to complete. And that won't be affecting any of the future subsidies as well.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Advait Joshi from Rising Star Investments. Please go ahead.
Sir, what is the cost difference between AAC panels and AAC blocks for the builder?
So practically, if you consider, if you consider the per square feet cost
right.
of a wall,
Yeah.
it will be very similar because AAC panels will not require any sort of plaster. There is hardly any requirement of any jointing mortar. So if you consider, and this I am considering when we are replacing a 4-inch block wall with a 3-inch panel wall, as the panel wall will be stronger as it has steel reinforced inside. So the cost for a 3-inch panel wall versus a cost of a 4-inch block wall will be very, very similar. But the time saving and all those things will be additional in panels compared to blocks. Yeah. Yes.
Yeah. Thank you, sir. Thank you very much.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Sania Mehta from Moneybee. Please go ahead.
Yes, I actually wanted to ask, what is the capacity utilization for the panels right now?
Sorry, can you please repeat it?
Yeah, as you mentioned, the JV that you just started, you all have panels in that, right? So what is the capacity utilization going ahead or right now?
So currently, the trial productions have just started before a month, and as we were able to do it in before 31st March, now that unit will also fall under 15% taxation, and the productions have just started, and I think it should pick up, in the next 15 to 30 days' time.
So what would be the capacity utilization at that time?
So initially to start with, usually it starts with around 10 to 15% every month, and then it goes up, it takes almost 6 to 8 months time to reach a capacity utilization of almost 75%.
Okay, so that was for the blocks also, and the same will be for the panels as well, because as you mentioned, so the market has not been penetrated so much yet. Still, the utilizations would be the same?
Yes, because till the time, we get enough orders for panels, we can always make blocks, in the same facility.
Okay. And what would be the, what are the margins for the panels going ahead in a month and for FY25 and FY26?
So initially the margins would be on similar lines of 20 to 25% EBITDAs for panels. But going forward, I think the margins in panels can further increase. But initially, as we'll have to introduce a new product in the market, we should be able to do it at a very similar margins.
And for the blocks, the EBITDA margins are somewhere around 25-26%, if I'm not wrong.
So margins since last almost 2 years are steady between 20 and 25%, and that is what, we should look forward to.
All right. And just one more question. As compared to your competitors, the margins are a bit better. So what would be the reasons for better margins?
I think there would be numerous reasons. I think we are the only player who's eligible for carbon credits, and I think that adds straight away to our bottom line. Having our own fleet of almost 75-watt trucks, wherein, to and fro transportation can be managed at a better price. So that really helps to our bottom line. And I think when it comes to pricing as well, we might be able to get almost 2 to 3% premium because of our quality and on-time deliveries. So that would be, all these three aspects would be adding to our bottom line compared to our competitors.
And to add to the same thing, one more thing is that we have good capacity overall the capacities that we have installed are pretty huge as compared to our competitors, because of which we have a better bargaining power when purchasing any raw material, whether it's cement, lime, aluminum powder, etc.
All right. Thank you so much.
Thank you. The next question is from the line of CA Garvit Goel from Invest Analysis Advisors LLP. Please go ahead.
Hello. Am I audible?
Sir, can you be please loud?
Hello. Is it fine now?
Yes, it is okay.
Yeah. Sir, my question is on the industry competitive landscape side. Like, we are currently at a capacity utilization of 50%. So are we facing any kind of hindrance or any kind of challenges in the terms of increasing the capacity utilization from here going forward?
So, we are not at a capacity utilization of 50%. We are at a capacity utilization of annually for FY24 it has been at around 75%, and for Q4 FY24 it has been at around.
Actually, I was comparing it with the in terms of total capacity that we are targeting. Like it is 13 lakhs volume, right?
So, Gaviji, not very clear as to what your question is, to be very honest.
See, I was saying we are looking for a target volume of 13 lakhs, right? In terms of, so I was looking at that from that perspective, like how much time is it going to take to for us to achieve the optimum utilization for that targeted capacity? Because I think since last 1.5 years we are talking about that target capacity, but we are not able to show that kind of volume growth that we were earlier targeting. So that is what my question is.
So Garvitji, in order to give a little highlight on that, from we started the Wada facility almost in first quarter of FY24, and initially in the first quarter our consolidated capacity utilization was around 65% as Wada was newly started. The old plants have been running at almost 80-85% plus capacity utilization. And from 65% we have gone up to almost 87-88% for Q4 FY24, and on an installed capacity basis for the financial year FY24 our capacity utilization has been 75% even after starting of new capacity at Wada. Similarly, in the current year we are expanding by putting up the JV project which has just started production and increasing the capacities at Wada. So for the current year also we are estimating targeted capacity utilization in the range of almost 75%, and from next year onwards of 1.3 million capacity, we will be targeting a utilization levels of upwards of 80%.
Okay, 1.3 million capacity will be by the end of this year on full basis, right?
For FY20, so we will be reaching a capacity of 1.3 million in the next 3 to 4 months approximately.
Understood, sir. Understood. So in that capacity, you are having a target of 80%. That will be in FY26. Is that understanding correct?
Yes, because it takes a period of almost 6 to 7 months to ramp up the capacity, starting by 10 to 15% on a monthly basis, and by a period of 6-7 months, we reach a capacity utilization of almost 75-80% plus. And earlier also I had mentioned that when we started the Wada plant in Q1 Concall, we had quoted that in the period of about 6 months we'll reach a capacity of 75-80%, and by October 23 we had reached the capacity utilization, and then in November 23 once we reached the capacity utilization upward of 75%, we took up the phase 2 expansion at Wada.
Understood, sir. And sir, in the terms of like competitive pressure, so are you people witnessing any kind of capacity expansions from your peers, and that may further lead to decrease in the margin in the future?
So honestly, there has been a competitive scenario in the market, and of the large competitive players that we talk about, whether it's Magic Lead or HIL, they are not doing any capacity expansion in this region for the time being, and amongst the others. So gradually competition has been increasing, but the demand increase has been so good that that is not bothering so much to the margins, to be very honest.
And just a clarification on your guidance. So can you reiterate your guidance for FY25?
So for FY25, as I mentioned, we should be in a position to utilize almost 70-75% plus capacity utilization is the target. with a revenue growth of almost upwards of 20%.
Okay, sir. Thank you very much, and all the best for the future.
Thank you.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Avi Agarwal from Arihant Capital Market Limited. Please go ahead.
Hello.
Hello.
Hi, thanks for the opportunity. So I had a question on the use case of AAC blocks and panels. So I wanted to understand that the builders using AAC blocks will be the same ones using the panels, right? So going ahead, if the demand for panels increase, so should we see a decrease in demand for the blocks?
So the usage of ALC panels, I think the first replacement would be all the builders who are currently using, different sorts of panels, like the bison panels and, different panels made of the sandwich panels. And other than that, yes, AAC blocks will also be replaced, but then even bricks and other concrete blocks would be replaced.
Okay, so going forward, should we see as the ALC panels as a replacement for AAC blocks?
So if we see, a lot of other countries wherein, these AAC blocks and panels both have been prevalent since almost past 1 decade, I think still, 80 to 90% market is of AAC blocks. Just 15 to 20% has been taken over by panels.
Okay. That's helpful. Thank you.
Yes. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I now hand the conference over to Mr. Mohit Sabo from Bigbloc Construction Limited for closing comments. Over to you, sir.
Thank you, everyone, for participating in this earnings con call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business and future growth plans. If you have any further questions or would like to know more about the company, please reach out to our investor relations managers at Valorum Advisors. Thank you. Have a good day. Bye-bye.
On behalf of Bigbloc Construction Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.